world is changing. Fast forward to 2050. The world population has passed 9 billion. There are 300 million more people in India than today. Emerging economies, urbanization, and internet connectivity have transformed countries and lives faster and greater than ever imagined. More people are on the move, more deliveries, more connections, more data, more homes and workplaces, more innovation. By 2050, the energy demand will boost by 50% compared to today. We need to make bold decisions to meet our future needs. We need to become more sustainable, intelligent, and efficient than ever before. We need to innovate. From ideas to whiteboards, labs to businesses, from one customer to another, we can transform countries and lives across the globe. Remember to think big and start small. We are the future of energy.
Welcome to Shell E4 Demo Day 2021, a celebration of the energy entrepreneurial ecosystem. I am Sanjay Bakshi, Program Manager of Shell E4 Startup Hub, and I will be a host for Day 2 covering energy entrepreneurs, which is E4 for life. We have an exciting agenda today. You can expect to hear from global leaders from the energy industry featuring venture capitalists, startup founders, and corporate leaders from the ecosystem. We also invited you to submit your most pressing questions during the sessions. Your safety is utmost important to us. Please make yourself comfortable by finding your postures and maintaining a social distance. Adjust the volume to make sure you can still hear any alarm that might go off in your vicinity. And take note of your closest exit in case of any emergencies. Okay, let's get started. I now like to introduce Mr. Tarun Verma, Vice President Human Resource of Technology at Shell India, to deliver the official welcome note, and with him will join Mr. Yuri Serbogets, Executive Vice President of Technology and CTO, all the way from Shell Netherlands, to deliver the opening address.
Good day, namaste, and a hearty welcome to all of you. This is Day 2 of Shell E4's Demo Day 2021, and we are powering progress through energy entrepreneurship. I'm Tarun Verma, Vice President and the Global HR Leader for Shell's Technology Division. Shell E4's mission is to accelerate India's transition to a sustainable energy future by empowering and enabling Indian entrepreneurs working on energy-related startups and helping them become sustainable, profitable, and significantly impactful organizations. We firmly believe that some of the best ideas come from working together, through collaboration, through cooperation, and leading us towards the ultimate goal of achieving net zero emissions by 2050 and extending the benefits to all the stakeholders. Shell E4 provides a platform for collaboration and conversation around the energy transition, offering startups an opportunity to bring their ideas to life with Shell's guidance and support. We share a rich history of working with entrepreneurs across the energy value chain globally, and we are interested in a broad range of energy-related solutions. Since 2018, I've had the personal privilege of working closely with Shell E4 from its very inception. And so far, we've worked with more than 30 startups in different domains like e-mobility, energy management, clean technology, energy IoT applications, digital solutions, logistics, waste to value, just to name a few. We have worked closely with the founders, their leadership teams, and helped them nurture their ideas and grow their companies. A number of these startups are working towards pilot opportunities with different parts of Shell. Today, we are hosting segments for a holistic view of energy entrepreneurship, especially in the climate tech space, the way startups are breaking out and scaling their ideas, the views of investors. How is the sector likely to transform? So please make yourselves comfortable and get ready for some inspiring insights into an energy entrepreneur's journey.
Good day, everyone. My name is Yuri Sebrechts. I'm Shell's Chief Technology Officer, and I'm delighted to be with you here in this virtual event. Thank you all very much for attending E4 Demo Day. At Shell, we are driven by our purpose, and our purpose is powering progress by providing more and cleaner energy solutions. And the combination is important. It's not good enough in the world to trade off more against cleaner. We need both for a sustainable future and prosperity for everyone. Now, one of the ways in which we pursue our purpose is through technology. As a company, we have a proud legacy of 125 years of technological innovation, and we continue to build on that legacy. We spend about $1 billion every year in research, and we do research together with partners and also in our major own labs in Bangalore, in Amsterdam, Houston, Hamburg, and Shanghai. Now, the challenge of achieving both more and cleaner energy, of powering lives and achieving a net zero emissions energy system, is far too big for Shell to achieve on its own. This is a very large and complex undertaking. So we need to work in partnerships with many others, with other companies, with governments, with academia, with civil society, and especially also with our customers. And that partnership approach also holds true for developing technology together. And we work in partnerships in a number of different ways. We work with academia all around the world in our Shell Research Alliance program. Universities in India, in the US, in Europe, in China, in many places. Another way that we have is to work together with very early stage startups in our Shell Game Changer program. We support early stage startups through mentorship and some funding and in many other ways. And often those startups go on to grow, and then we can continue to work with them in another way, and that is through Shell Ventures, where we take an investment and an ownership stake in larger and more mature startups. We also work in Shell TechWorks together with companies from completely different sectors to integrate the technology solutions that exist in those sectors into the challenges that we have in energy. For instance, solutions from the aviation or space or defense industries. And sometimes all these ways of working together with others blend together. I'll mention a couple of specific examples. One is our partnerships with one of the national laboratories in the US, the National Renewables Energy Lab, run by the US Department of Energy. And we not only do joint research with them, we also jointly sponsor a program where early stage startups can call on us for financial and other support. It's called Game Changer, powered by NREL. We do a round every 6 to 9 months where we take calls for proposals. And in the first 3 years since its existence, we've already spent more than $3 million in sponsorship. And some of those companies are growing and are becoming very successful. The focus thus far has been a lot on grid integration, on battery storage, and on e-mobility. And several of these early stage programs and companies already have paying customers. Many have demonstrations up and running and pilots. Some have even closed their first Series A round of investment. So it's a very successful program, which is a combination of working with academia and with startups. Another specific example is a company that call out called Asparatus. Asparatus is a fairly new company. It's existed a couple of years, and it specializes in immersive server cooling. The number of IT servers in the world continues to grow fast. They are huge consumers of energy. Part of that is because of all the cooling that needs to happen. And immersive cooling into a fluid is a much more effective way of doing that than air cooling. And we work with Asparatus in two ways. One, we are an investor in them through Shell Ventures, but we also co-engineer the technology development, because the fluids that they use to immerse the surface in are fluids that we then develop in our Shell lubricants business. So it's an investment and a joint collaborative approach. Another example is a company called Axoloth. We've worked with Axoloth since its inception in 2015. First, through our research relationship that we had with the founders at MIT doing joint research. Then the mentoring of them in very early stages through our Game Changer program. And then we took an investment stake in them as they grew further through Shell Ventures. And now we are deploying their technology in many of our own projects. And the technology that they have developed is an engineering technology, very complex engineering technology, where they use real-time monitoring through digital twins to look at the integrity management of large structures, such as ships, other offshore installations, but also offshore wind farms, for instance. Clearly a technology that is very important for a future of more and cleaner energy. Now, I could quote lots more examples, but I'll stay with these three and get back to the E4 demo day, which of course is the focus of these 2 days. Again, thank you for attending E4 Demo Day. E4 is a program that we've now been actively sponsoring for 4 years. It is our India-focused program, focused on technology, collaboration, and development in all its different ways. And I'm sure these 2 days you will hear many other exciting examples of the work that we're doing together with others in India. And I very much hope that it will inspire you to get on board if you're not already participating, and to join our efforts in pursuing our purpose of powering progress together by providing more and cleaner energies. Thank you for your attendance today, and thank you for allowing me to participate. Have a great day.
Speaking on the topic of breakout ideas and energy startup ecosystem readiness, I now have the pleasure of introducing you to Moran, co-founder and CEO of Zoomcar, in a startup talk moderated by Debanjali Sengupta, General Manager, Lubricants at Shell India. We would love you to leave your most pressing questions in the box next to the video player. Over to you, Debanjali.
Hello, everyone. To introduce myself, I'm the country head for the lubricants business in India, Shell India. Very excited to today have a fireside chat with an amazing individual, Moran, the founder of Zoomcar. And Zoomcar, you all know about it, an Indian self-drive car rental company, started in 2013, and very much here in Bangalore. A little bit about Zoomcar. Zoomcar is revolutionizing the Indian transportation industry with its presence over 50 cities, and its fast-paced expansion plans in the EV segments to become 100% electric in the next 5 to 6 years. So let's welcome here Moran. Thank you for joining my fireside chat today.
Sure, thanks for having me.
So Greg, in Shell, we actually work a lot with different startups, trying to really help them in this ecosystem, in this space. And this is going to be a great learning for the startups that we really support. And that's the reason I'm going to ask you a few questions, and whatever you share is going to be a great learning for the startups. So first, maybe, just very curious. So where did this whole idea come from? Somewhere in New York, and then a car rental company in India, Bangalore, and where did it all start?
Sure, yeah. So my background, was actually in the finance side, doing emerging markets, ESG work. So clean tech, renewable energy, sustainable infrastructure. Okay. So I did a lot of work in India, Southeast Asia, Africa. And so, ESG, the environmental angle was always the most important for me. in terms of impact, and big cities is always a big focus. So it just naturally started to gravitate this direction. So I was working on Wall Street from '07 to 2012. Towards the end of that stint, I realized that I wanted to do something more disruptive on my own in the consumer internet, software space with an emerging market ESG focus. So transportation mobility seemed to be a more natural sort of sub-vertical, just because it was not as controlled by the government and more something that you can influence from the private side. And so kind of started to study in depth more on the transport mobility space, and noticed that you had just a massive dearth of ownership for cars. If you look at across the top 25 emerging markets, India included, you have just 5% or less in terms of ownership level, which means that the mass middle class is really struggling without access. And so you have across the top 25 emerging markets 1.3 billion people who are without access to a car, who would want to have access for 2 or 3 times a month. And so that's the problem statement, right? So on one hand, on the other hand, you have over 175 million cars in these 25 markets. India alone is 45 million plus cars, and these cars are getting utilized just 1 to 2 hours a day. So you have on the supply side a massive inefficiency as well, where you have individual vehicle owners as well as small medium businesses who own vehicles where the cars are just not getting used. So we set out to build a platform, which would be a marketplace, which would really align both sides of that problem statement to make sure that it was getting handled in an efficient manner for the supply, and then being able to provide access for people who wanted to actually take out a car for a couple of hours or a couple of days. So it's really creating that two-sided marketplace dynamic, which is going to create that efficiency and that opportunity at scale in India, as well as these other 25 markets. So if you look at Southeast Asia, if you look at Middle East, if you look at Africa, all these countries have the same problem statement around this opportunity. And so we felt that India was the best place to start, and then to ultimately move into these other geographies, which is what we've done. So now we're in 5 countries. So we're in India, Indonesia, Vietnam, Philippines, and Egypt.
Fantastic. Great thought, and as well as started execution as well. So it's not just an idea. What's the statistics, the numbers, the India's demographic always looks very, very exciting. But I just wanted to also learn at the same time, what has been your challenges in trying to transition into getting into the electric space and launching and and manufacturing as well, the cars, electric cars?
Sure. Well, I mean, we're a platform, so we're actually quite agnostic, to whether it's petrol, diesel, CNG, or electric. But I think ultimately, I think we're going to certainly blaze the trail as it relates to EVs, just because a shared platform, a two-sided ecosystem, marketplace is going to very naturally gravitate towards EV, because it's ultimately electric vehicles are still capex expensive. And so, but the ownership cost is much lower when you factor in the overall running. And so the operating costs are much lower, of course. And so on a platform like ours, the cars ultimately get used way more. So they'll get used 5x, 10x more, right? So that's the nature of the beast with any shared platform. And so ultimately it's making electric cars much more affordable and attainable. So if you look at similar platforms in the US and China, these platforms have already become a very significant component of them have gone electric. In China, many of them have been actually gone all electric. Of course, China leads the world on the electric side, but then even in the US with players like Turo and GetAround, you're seeing meaningful percentages coming from Tesla, coming from Nissan, some of the other big EV players. And obviously GM and Volkswagen, some of the other guys are now starting to get much larger. In India, that's still a little ways behind. I mean, you pretty much only have Tata, who has an EV out there on the market today. So the other EVs are extremely small scale in terms of supply, right? They're very niche. They're still very expensive. So it's really only Tata who's out there today. But I think you will certainly see that evolving. But our platform is going to be front and center.
Absolutely. And I think you touched upon a very good point that, the ownership cost, instead of that, here people can just use an EV on your platform. So it saves them the ownership cost. Great. And
Right.
and I think the other bit is that this is, as you rightly said, it's an interesting space. Many people getting into it, competition is going up. How are you managing this crowded space?
Well, we don't really have any competition. If you look, our space doesn't really have anything. So we have over 85% market share. This is not ride hailing. This is not, a other shared mobility space where, there's really a number of different competitors. Our space is pretty much competitor free. And I think the reason for that is simple, is that, it requires a massive amount of technology investment in terms of IoT capabilities, in terms of, data science, machine learning, AI capabilities, computer vision capabilities, but really the combination of sort of the IoT side plus the broader personalization engines that we built out have, I think, really created a differentiated layer. And the fact that it's a two-sided marketplace, it's hard to kind of, once someone already comes in with a two-sided marketplace, builds the network effects, it becomes very hard. The switching costs are very high. So it's very hard to kind of disrupt the marketplace that's working well at scale. And so I think that's what we've seen. And ultimately, we're very, very focused on maintaining our focus on marketplace. And, we're not, going to be, changing and switching gears from that. So, we believe our market share will continue to grow. And then, the fact that, you have to, not only make significant tech investments if you're going to come into it, but you need to make huge brand investments in terms of those, dollar
Indeed.
values to build the awareness that we already have, and the 8 years of experience that we already have. So, I think we're in a pretty strong position competitively in the Indian market right now.
Good, great thing. It's a great space to be in. And just any ideas of how, you're really planning? I'm sure the next scale, hitting a big scale is already there on your plans. How are you planning this whole scaling up story with the EV space?
Well, I mean, I think, as I mentioned, so, EVs, it's going to be a gradual phase in of EVs as the market, has more EVs coming in. And right now, as I said, there's really only Tata who's in the market with EVs.
And Mahindra too, a little bit. Yeah.
Yeah, but not really. I mean, so not on the
really.
car side. So they don't really have any cars right now. So, they have more of the electric three-wheelers. So, once you have, more electric cars, I would say, really, I mean, you have to have supply to build demand, right? So at the end of the day, you lead with supply. And so, India's, 4 to 5 years out from having material electric car supply. I think we all know that. I think that is the reality, where you're going to see a more meaningful impact in terms of penetration. And so electric two-wheelers will be sooner, electric three-wheelers will be sooner, electric small trucks, so like the Tata Ace equivalents. So that form factor, some of the LCVs will be sooner. But the cars, the buses, the trucks, those will be the last. Those will be bringing up the rear. So we don't see, really, I mean, there's no line of sight to seeing, I would say, significant electric car penetration on our platform in the next, 2 to 3 years. I think over the next 4 to 5 years, though, obviously that would be, in our view, significant. So I think certainly over a period of 7, 8 years, it'll be 100%. But it's just a question of what that means for near, medium, long term. I mean, near term, obviously not a lot's going to change. Medium term a little bit, and then long term it'll be obviously significant.
Great, thank you so much, Greg. And any advice or any thoughts around how players like Shell can really participate in this and really support the entrepreneurs in this space?
Yeah, well, I mean, I think it's always an opportunity to collaborate on biz dev initiatives. So I think, I mean, you guys have certainly a strong presence in liquid fuels and now renewables globally. I know I've worked a lot over the years with Shell on the wind and solar side, even prior to starting Zoomcar. So yeah, I would say certainly as you guys start to build out more electrification infrastructure, that's the natural place to collaborate, I would say.
Infrastructure. Okay. So because we have started to work with the EV startups, so with the infrastructure, you're right. That is the thing, and that is right now the need in the country, and that's where you think that Shell can play a role.
Yeah. I mean, at the end of the day, I mean, all the oil E&Ps are just infrastructure companies, right? So that's what you guys do best, is deploy, large scale amounts of capital. So
Perfect.
yeah.
Thank you so much, Greg. And any words of advice that you have for our startups, and your mantra for the startups?
Yeah, I mean, just to keep iterating. I mean, at the end of the day, it's all about iteration, moving really quickly. And, you're obviously not going to get it right the first time, second time, third time, fourth time. So it's all about just continuing to iterate and continuing to improve and get better.
Thank you so much, Greg. We wish you great big success with Zoomcar. India for sure needs it, and we're just hungry to do more.
Looking ahead, please welcome Geert van der Wouw, Vice President Shell Ventures, to give us some insights into his investor views on the energy landscape. Over to you, Geert.
Hello everyone, my name is Geert van der Wouw, and thank you for giving me the opportunity today to talk with you about the energy transition and the future of energy, which is my favorite topic. It's an important topic because by 2050, the amount of people on this planet will have increased with another 2 billion compared to where we are today. That means there are going to be 3 to 3.5 times more people on this planet than when I got born, which kind of tells you how old I am, I guess. But more importantly, it tells you that in this period where we see increasing pressure on the system, the energy system, from rising populations and increasing living standards, at the same time, we need to reduce our carbon footprint. And we believe that collaboration with companies like yours and Shell are going to be really important, as you guys are at the forefront of developing new technologies and business models that will help innovate and transition the energy system to where it needs to be in 2050. And this will really help Shell also to achieve its objective of becoming a net zero carbon business by 2050 in step with society. Now, we have already made quite a few investments in India. We've done an investment in Rapido, which is a 2-3-wheeler ride-hailing taxi application. And we're really excited about our investment in Rapido, and they seem to be doing really well, which is really great to see. 2-wheelers and 3-wheelers play an increasingly important role in the Indian mobility and transportation sector. We've also done an investment in Orb Energy that provide renewable energy to small and medium enterprises, hospitals, and entrepreneurs like yours. We've invested in Husk Power, which provides distributed energy solutions and mini grids to rural areas in India. And India is a thriving ecosystem of startups. I understand between 2005 and 2020, you've seen more than 8 to 10% growth year on year in terms of startup inceptions. Last year alone, more than 1,600 new startups emerged. You have a thriving ecosystem of hundreds of incubators and accelerators, which really helps to support these early stage innovators achieve the growth that they are looking for and test their business models and their technologies. Now, we believe that we cannot invest in every startup. We are one of the most active investors in renewable energy and mobility worldwide, but we can certainly help you kind of test your ideas and provide you feedback. That's the minimum we can do. And if we invest, which has happened in a couple of cases, as I mentioned, we do really help the startups we have invested in to create revenue generating opportunities within Shell businesses, which is important. In the end of the day, the only way we can achieve our objectives from the energy transition is going to be through scaling. And scaling and innovation deployment is an often underestimated aspect of the innovation cycle. But it's really important because the energy system is so large and it impacts us at so many levels in our society and in our lives, that in order to have an impact, you really need to create scale. So we're here to help, and as part of the E4 program that you're in, I really ask you to a couple of things. First of all, don't be shy. And since the energy transition requires an extraordinary effort from all the players in the ecosystem, don't shy away from coming forward with extraordinary ideas. And secondly, I think, we can really help by providing you feedback and input to your business models and your technology and the way you want to grow and prosper your business. Because we believe that entrepreneurship, to a large extent, is about iteration with your customers and with your business partners. And we are here to help. So I hope you enjoy this program. I have certainly enjoyed it in the past myself.
To continue our learning today, I would now like to welcome Bryan Hassin, co-founder and CEO of Third Derivatives, to share some tips for entrepreneurs from incubation to impact. Over to you, Bryan.
I'm Bryan Guido Hassin, the co-founder and CEO of Third Derivative, a joint venture between RMI and New Energy Nexus, where we're working to find, fund, and massively scale the most promising technology solutions around the world to most pressing climate challenges. And because one of our parents, RMI, is a think, do, and scale tank, we often find that framework helpful for sharing out kind of how we see the world. So we think that technology is going to play a crucial role in building the sustainable, prosperous, and equitable energy future. Actually, I would go further and say we know that that's the case. Our math indicates it will take about $100 trillion US invested in technology to affect that transition over the next 30 years. And some of that will go toward deploying mature technologies like solar and wind at greater scale. But a lot of that will go toward bringing at least 2 to 3 new gigaton scale impact technologies to market every year for many years, if we have any hope of meeting even the most modest climate and energy transition goals. So $100 trillion US sounds like an amazing opportunity. And yet the climate tech space is woefully underinvested, orders of magnitude lower than categories like software and biotech, et cetera. So why is that if there's such a great opportunity here? We believe that it's because commercializing, deploying, and scaling climate and energy tech is hard, right? The entrepreneurs often have long paths to market, significant capital needs. That's a challenge in and of itself. It's especially a challenge that's felt when they're trying to raise capital, right? And they're competing against, apps and cryptocurrencies and things with very different return profiles. And we have a lot of empathy for the investors as well. Their small teams often lack the capacity to do diligence on really hard technologies coming out of labs and universities everywhere. For startups that do attract the necessary capital to get off the ground, often their path to scale leads directly through some large, bureaucratic, slow-moving, risk-averse corporate entity as a customer or deployment partner or even investor or acquirer. But these are the types of organizations where it can take a year even just to find the right person to talk to. And here again, we also have empathy for the other side of the table. Corporates are telling us every day that their CEOs and boards are making bold climate commitments for which they know they will need to deploy new technologies, but they have no idea how they're going to do it. They're not organized to scour the globe for promising tech, test it out rapidly in its early stages, and then deploy it at organizational scale. And then, for entrepreneurs and innovators who can even navigate that challenge, at the end of the day, their journey is set against a regulatory and policy landscape that often favors incumbents, not disruptors. So, whereas we often think of a startup as facing a valley of death on its path to scale, we would submit that climate and energy tech startups actually face 4 distinct valleys of death. And every time they successfully navigate one, they're back to square zero, having to educate an entirely new set of stakeholders. At best, this slows down the rate of climate tech innovation during a crucial decade when we need to be speeding it up. And at worst, and unfortunately, this is what we see quite often, really promising climate tech just dies in the process, gets lost in one of these valleys of death where the entrepreneurs just give up because it's such a slog. So the system is broken. And we believe it's especially broken because of this multi-stakeholder challenge. So third derivative, we're working to transform the system explicitly by bringing all of these crucial stakeholders together, the transformational entrepreneurs, visionary investors, global corporates, and even policymakers to the table to get everyone kind of working together and rowing in the same direction toward common climate tech goals. The way that works today, and I have to be clear that we're a startup too, so we're evolving rapidly, is we have a team that's 24/7 scouting the entire globe for really promising technologies. And it's important for us, not just that they be promising technologies that could have a significant climate impact, but they're also technologies that are of interest to our corporates and helping them meet their innovation goals, and of interest to our investors and help them kind of match with their investment theses. So we identify startups who kind of meet all these criteria. We bring them into a bespoke virtual accelerator program that has all the trappings of what you might normally associate with a startup accelerator: curriculum, mentorship, guidance, et cetera. And each of the startups receives, at their option, a $100,000 US seed investment from one or more of our VC investor partners. And their derivative also co-invests alongside them. That's really crucial, because that gives the investors skin in the game, such that they then are working right alongside our startups, helping them define and pursue investability milestones, sharing their networks, making connections, offering guidance, et cetera, all the while gaining unprecedented diligence for follow-on funding to invest directly in these startups. And so then working right alongside them are our global corporate partners. And we have an entire team dedicated just to facilitating deal making between the startups and the corporates. So helping the startups kind of navigate corporate bureaucracy and helping corporates tolerate startup risk, which has traditionally been a challenge. Then working in the background, we have our parent organizations, RMI and New Energy Nexus, kind of doing what they do best: deep techno-economic analysis, access to policymakers, convenings of leaders in both the public and private sphere, and then in New Energy Nexus's case, running a network of more than 100 accelerators around the world focused on energy and climate transition. So we have to be very clear: we are not a startup accelerator that happens to have some partners who show up at demo day. We really look at each of these sets of stakeholders as co-equal participants in what we would call a systems accelerator. And this gets to our theory of change. We believe this deeply integrated approach can not only increase the success rate of promising hard climate tech, but almost as crucially, can increase the speed to success. So it can actually push up IRRs and de-risk the entire category. So if the millions of dollars we're investing today can attract the trillions of dollars that ultimately need to be invested in this space. So sounds well and good in theory, but what are we actually doing? As we know, in the entrepreneurial world, the proof is in the pudding. So we're quite a young organization. We just launched last year, in the middle of a global pandemic. But since then, we've built an amazing team of climate warriors, mostly from the private sector. So a bunch of ex-climate entrepreneurs like me, climate investors, climate tech analysts, techno-economic analysts, policy wonks, et cetera, kind of all of the skill sets that we think are necessary to bring these different stakeholders together, and growing rapidly. We'll probably double headcount by the end of this year. And in a relatively short amount of time, we've built a pretty awesome ecosystem as our kind of minimum viable product. So nearly $4 trillion US represented in our corporate partners. And thank you to Shell for having the vision to be one of our early founding partners. More than $1 billion US of investment capacity in our investor network, and the capability to invest on kind of all of the major continents. And most crucially, we've built the largest climate tech startup cohort in the history of the universe, as far as we're aware. And that was our first shot on goal. Our aspirations are even higher. And let's be clear, right? One of the reasons we go for scale isn't just for the numbers' sake, but it's because we believe there are self-reinforcing advantages to kind of investing across entire systems or investing across entire value chains. So as an example, we have one startup that's an Indian startup that does light electric vehicles for last mile logistics. They're great. We think they can be very successful on their own. We have another Indian startup that does financing for light electric vehicles. We think they're great. They can be very successful on their own. Together, though, we think they can be even more successful. And so those are the types of systems that we're looking to invest in and reinforce. So we've built this ecosystem, which has a lot of potential, but of course, it's only as valuable as we can actually activate it. So in our first few months of operations here, we have directly invested $3 million US in our portfolio companies that have come through the accelerator. Our investor partners have co-invested an additional $5 million US in those startups. So we see some leverage to help us kind of meet our goals. And most crucially, in the few months that we've been running, our startups have raised a further nearly $90 million US. And by the time you're watching this, it'll probably be more than $100 million US because we have several deals that are still in the works. We think that's pretty good. Nearly $100 million of capital attracted and closed within just a few months of having started the program. But let's dig down on that a little bit because that can be a vanity metric. One crucial statistic is that actually 19 out of our 46 first cohort startups have closed a follow-on round of funding already. So nearly 50%. So we think that's pretty good. And it's maybe harder to tell how much of an impact we had versus how much they might have just done on their own. And so we asked them as a heuristic, and more than half of them say that we've been very helpful on their fundraising journey, and nearly a third of them actually say that we've been crucial in helping them meet the investors and close the round. So we think there's some early validation that this deeply integrated model can work. But if you've heard me at all, you've recognized that $90 million isn't going to cut it. Like we need trillions of dollars, not millions of dollars, to invest in this space. So we also think hard about scale and how to scale rapidly and intelligently. So we're scaling simultaneously in several different directions. First, we're just scaling our ecosystem. We're on a daily basis, we're adding new corporate partners, new investor partners, and of course, new startups, which we're evaluating on a continuous basis. We're also expanding geographically. Although our initial cohort was 46 startups from 11 countries around the world, we think there's a much greater global opportunity. And so we're making concerted efforts to build out networks and abilities to support and scale startups in Southeast Asia, in South Asia, and in parts of Africa as well. We're taking a more thesis-driven approach in which we're picking specific theses in which we can build these self-reinforcing systems and invest across value chains. So our first is launching right now in direct air capture, but we'll announce several more soon in hydrogen and synfuels and a number of other categories. And we're adding new funding capacity as well. Every cohort of startups that we bring in, we want to make sure has aligned, committed capital ready to invest for follow-on, just to make sure that our entrepreneurs don't have to stop and spin their wheels for 6 months while they're trying to go out and raise their next round of capital. We've been focused so far in the second and third valleys of death, but the first and fourth valleys of death need a lot of love too. So we're launching new initiatives to make sure that we're addressed in those areas and that we have a completely seamless pipeline, kind of from lab to massive commercialization and scale. And so a couple other areas of scale and growth and innovation that I can't quite announce yet, but stay tuned because it's pretty exciting. And if I could just leave you with one thing, maybe just one piece of advice to either existing entrepreneurs or aspiring entrepreneurs, is that now is the time. Take the plunge now. It can seem scary, it can seem risky, but we're living in non-linear times, right? Climate change is a great example. Climate change, the effects of climate change can be very slow until you hit tipping points, and then they exponentially increase their impact. And it's the same with an entrepreneurial journey, right? A learning journey or a try, fail, adapt journey in which things can go slow, you can have some failures, or it can take you a while to get the right team in place. But then once it all clicks, then things go exponential. And it's crucial, given the timeline that we're on, to start that journey now, to start moving along that curve. And the good news is there are organizations like us and hundreds more like us that are here to support you, that are undergoing our own exponential curve entrepreneurial journey. So our ability to help and support and make you successful is increasing on a daily basis. So take the plunge. It can seem scary, but there's a massive safety net. The universe is conspiring to help you be successful. And there will never be a better time.
Hi, I'm Aditya with Shell since 2015 and volunteering for Shell E4 for the last 2 years. The nature and the scope of work at Demo Day is dynamic and constantly evolving. It always keeps you on your toes. It gives a chance to learn about startups, interact with entrepreneurs, and opportunity to be part of their success story and help address Shell in achieving net zero carbon emissions. Volunteering is all about planning and prioritizing. Shell E4 team, along with my life, were very supportive, and it really helped me manage my day-to-day responsibilities.
Working on technology strategy takes time to provide results, from planning right down to execution. Shell E4, however, is faster and makes working more exhilarating. Shell E4 gives me a bird's eye view of how the future of Shell's energy ecosystem would look like. Working on the front lines of enabling Shell's current and future business value add just gives me that extra motivation to push on.
Hi, I'm Vineet. I've been working with Shell for the last 3 years, and I've been part of the Shell E4 volunteering team since I joined. Shell E4 volunteering, it keeps me very active and also makes me feel alive, thus making my day feel less monotonous. I love being part of exciting communities and events in general. Shell E4 in specific aligns with my vision of a sustainable future. I make sure that I discuss with my managers the level of involvement I have in my volunteering activities. And so far, they've been very encouraging and also pushing me to do more.
We have learned so much today. Our final segment for Shell E4 Demo Day is our Entrepreneurship Masterclass. How do you grow from idea to scale? Pratibha Priyadarshini, Vice President Human Resource at Shell India, will be moderating a panel featuring esteemed thought leaders from L'Oreal, Microsoft, Rapido, Total Carbon Neutrality Ventures, and Bharat Innovation Fund. Once again, please feel free to submit your most pressing questions in the Q&A box found next to the video player. Over to you, Pratibha.
Okay, good afternoon, everyone, and welcome to the E4 Demo Day 2021, hosted by Shell and the E4 team. This panel discussion on startup to scale is an extremely exciting part of our two-day activities planned for the 6th and the 7th of October. My name is Pratibha Priyadarshini. I am the VP HR for Shell India Businesses, and I'm going to be moderating this panel. We have today an extremely accomplished panel from founders to academia to experts to startup fund managers and a wealth of experience that's being showcased. 5 of our panelists here on the screen that you see, and I'm going to let them introduce themselves, but I'll direct them from here on. Thomas, would you like to go first?
Sure, my name is Tom Ostebro. I'm the L'Oreal Professor of Entrepreneurship at HEC Paris, also the Academic Director of the Creative Destruction Lab in Paris, run together with HEC, where we try to massively accelerate startups in the area of climate change and sustainability. Thanks.
Thank you. Thanks, Thomas. Aravind, would you like to go next?
Yeah, thanks, Pratibha. I'm Aravind, co-founder of Rapido. We are into a two-wheeler ride-sharing platform. We provide affordable and accessible mode of commute throughout the country. And we solve it on a two-wheeler, which is India's most common man's vehicle.
Great. Thank you, Aravind. Lathika, would you like to go next?
Sure. Hi, my name is Lathika Pai, and I'm the country head for Microsoft India, where I manage the venture capital and private equity partnerships. along with working with the overall broader startup ecosystem here in India through DIE Delhi and a couple of other engagements. So very passionate about startups.
Thank you, Lathika. Shyam.
Hi, I'm Shyam Menon. I am a co-founder of the Bharat Funds platform. It's an early stage venture capital platform where we have funds in climate tech, deep tech, and digital infrastructure. These are the three spaces where we invest in startups in India.
Thank you, Shyam. Xin?
Yes, thank you very much. A great pleasure to be here. My name is Xin. I'm the managing director for the Total Energies Ventures. So we are the corporate venture arm of the international energy company Total Energies. And we invest globally in the field of mobility, energy, and sustainability. And myself, I'm covering the Asia Pacific activities. So on the top priority are India, China, Southeast Asia, and Australia. And India is really in the heart of what we are looking at, given all the massive progress in the relative sectors. Yeah, so look forward to the exchange today.
Thank you. And I must say a very humble list of panelists, because I can go on to say so much more about each of you and all of the things that you've actually done, which doesn't do justice to the 2 minutes that you've just given yourselves. But I know that people will look you up, and there's so much more that will emerge as we go through our conversation. So what I'm going to do right now is kickstart a conversation around really a very simple topic. It is about how do you scale startups from an idea that comes up through to success. And each of you has looked at it from completely different lenses, and in some ways seen much more of what not to do than what to do as well. So I do hope that in your answers, you're going to be able to weave through a lot of good advice for especially the energy startups and the entrepreneurs that we in Shell are looking to sort of fund through our E4 as well as Shell Ventures. And who will be a big part of our audience at the moment for them to learn and glean away from, right? Thomas, we live in very strange times in India today. So on the one hand, there's been many small and medium businesses that have actually had it really rough during the pandemic. The economy is also very wobbly, and we're not really we're not sort of hitting the ball out of the park. But yet the stock market is really sort of booming. We've got several startups that have actually seen massive scale as well as going the IPO route in India. And in the last years alone, there's been a record level of venture capitalist money that's actually come into the country. My own question to you is, post-COVID-19, do you actually find the growth narrative of India attractive? And what, in your opinion, are the sectors in India that are actually ripe for the next wave of destruction?
All right, so from my perspective, I'm going to answer mostly with respect to climate change and sustainability ventures. So this is where we work the most at the Creative Destruction Lab. And we try to scale ventures that are coming out of universities and labs across the globe. They can apply to CDL. There's no particular location that is required. We see a lot of action in the area of decarbonization and other applications such as hydrogen, mobility, wind technology, to name a few, and also quite a lot in bioengineering. It's quite a wide range of sectors that are really hopping right now, and there's an enormous amount of appetite for venture capitalists to fund these ventures. I think with respect to India, of course, it'd be interesting to see if one can combine this appetite with ventures that are speaking to the bottom of the pyramid. And so where massive growth can be accomplished by providing very cheap products and services to a large number of Indians. I don't know specifically what that would be, but I know that there are companies that are represented in Creative Destruction Lab that are doing exactly this. We have a representative of Total Carbon Neutrality Ventures, and they made at least one investment in India although it's a French venture capital company. And we have other representative venture capitalists that are actively looking at developing countries, for example, Environmental Technologies Fund and Breakthrough Energy, both located in Europe, but with a keen interest in other areas as well. So I think there's actually quite a lot of opportunities in the area of bioengineering. I'd be very interested in sectors, the agricultural sector in particular, where there's a lot of issues with respect to, for example, soil regeneration. So anything that's coming out of the university that deals with, regenerating soil in areas such as India would be very interesting.
To my next question, and Aravind, this is for you, and you're the founder of a very successful business venture at the moment, and you have really scaled up. And so what do you think are some of the things Rapido has actually done to scale? And specifically in view of the COVID-19 and the pandemic that's actually happened, how have you navigated through this?
Sure. Maybe I'll answer in two ways. COVID, I'll answer to the later. I think if you see our journey back in 2018, when we have identified our product market fit, because there is definitely some of the baggage of mobility that needs a lot of money. Mobility burns a lot of money from an investor's point of view. But one thing that we tried to do from the start is having fundamentals very, very strong. What it helped us is when we identified product market fit, we aggressively scaled from then. It took us more than 3 years for us to launch the second city, or maybe launch the third city. But from a third city to maybe 100 cities, we launched within 5 months. I mean, that is a kind of pace at which that we went once we identified that this is working out. I think it's time for us, because we launched in one tier 1 city, one tier 2 city already. So now we know that entire India is a mix of tier 1 and tier 2 cities, even though every city has its own nuances from a scale point of view. But the problem that we are solving is a fundamental problem, which is mobility, which is movement. But a lot of players till then were solving only for metropolitan cities and only for a premium audience. But we tried to solve for masses, which is like maybe the people who are just coming online, people who are, because India vehicle ownership is much lesser. So having that is one of the very important things that we have done, that we expanded when we felt it's the right time to expand, and that at a much, much faster pace. And the second thing is definitely raise money when we don't need. So we kept on raising money in 2019 when we were not in the need of capital, and then COVID hit. So it definitely helped us that we are well capitalized. Maybe we are the only mobility company in India who didn't do any layoff, or didn't impact any of our people during that time, even though our business has impacted the most. That helped us to actually take initiatives during COVID. Some of the initiatives that we took during COVID have accelerated our future plans. For example, just from being a two-wheeler ride-sharing platform, we expanded into three-wheeler ride-sharing, and we also started doing pilots for EV electrification of our two-wheelers on ground, and entered into logistics on demand. Because right now, people are sitting at home and ordering food, ordering grocery, but there are very few logistics companies who are able to do on-demand delivery. So we are logistics partners for Swiggy, Zomato, JioMart, where we deliver within 15 to 20 minutes for their demand. So definitely during COVID, because of the team that we have and because of the capital that we have raised back in 2019, we were well positioned to take some initiatives and accelerate some of our plans. Those are some things that we did really well, and then we are definitely fortunate to recover 100% of our business. Even though people are still working from home, still we are doing these Zoom calls, but still we are able to 100% recover because of the initiatives that we took during COVID.
And so for my question to you, Shyam, and I've just had this written down, so I'm going to read this, is not just Shell, but many companies are actually going after the next $500 million segment, right? So spread across more than 100 towns and mini towns. The demographic actually presents a massive market challenge and a massive opportunity in multiple areas: health, education, energy, consumer goods, etc. But the reality is that it's actually quite difficult to crack many of these markets for companies. And there are some companies who've done it well. So you've got the old behemoths, like you've got HUL, ITC, Dabur, etc. But there are only a few startups that have actually scaled up and built successful models in Bharat. Yeah. So what should, in your opinion, therefore, what should, and Aravind, I sort of almost gave a segue to this, right? So in your opinion then, Shyam, what should startups actually be doing to scale up or succeed in Bharat? And I'll keep it as open as that.
I mean, most of the startups today are scaling in Bharat. So, I mean, the first 100 million users are already taken. So if the scale up is actually happening in Bharat, the remaining billion people is where the scale up is happening for pretty much all the startups. So it's not that it's that hard to crack. I mean, as long as you're able to develop the products and solutions at the right price points, the market is there and the market is looking for solutions. And it's not true that startups are not cracking it. Startups are cracking Bharat in a very, very big way. Pretty much every single service and solution that you have in the tier 1 market, now you have a version of that in the tier 2, tier 3, going even into tier 4 and tier 5. So, I mean, it might be a perception that it's harder, but it is being cracked on a daily basis by the startups in the ecosystem. A lot of things help. The fact that you have things like India Stack and a digital health stack, there are a lot of the core technical architectures that is being developed and made freely available. For example, the fact that you can do biometric authentication, you can do the UPI payments across using mobile phones. You can do digital locker, store all your documents online. You have so many core technical architectures that has been created, which will allow a lot of the costs which would have otherwise been incurred by large corporates in the past to go away. The playground is far more level today than it ever has been. So, I mean, we don't see any problems for startups to crack Bharat. And we expect all the next multi-billion-dollar companies to come from cracking Bharat. So, and it's happening on a daily basis. So it's no longer news to crack Bharat. It's happening anyway.
Nice. That's actually an interesting one because it's busting my own perceptions and myths around the next $500 million. And then even because we're talking about Air Bharat, where there's not even electricity freely available or easily accessible for people. And you've just sort of said it's about all of these digital structures and all of the ease that AI and digital stuff that's freely available that's actually coming in and at the right price points. Just moving on now to Xin, to yourself, and with the extensive experience you've had and continuing to build on the Bharat and the next $500 billion theme, right? So India has a pledge for reducing its carbon emissions by 35% by 2030. And of course, what that means is that we've had a big push towards solar and renewables by the government. And now there's also this whole space of electrification of mobility and transportation sectors by the government. So you've sort of seen China and doing it so successfully. So the question is, where do you see opportunities in India for decarbonization over the next decade? Are these like realistically possible? And what really stands in the way and what are the opportunities?
Thank you so much. It's a great question. It's absolutely possible and it is happening. So from our perspective, we think it's, as you rightly mentioned out, to achieve carbon neutral, there are quite a lot of different sectors. Energy is the most important one. The production and transmission of energy and consumption of energy account for 75% of the greenhouse gas. And the second one will be mobility. enormous electrification and new mobility services coming to practice. And most importantly, there's sustainability method as well to get really to lower carbon or even carbon neutral in the future. So maybe just to name a few that we see a huge potential actually is already happening quickly. The first one is on the energy sector. We see that Indian government is very determined, admirably adding those gigawatt and gigawatt, hundreds of gigawatts of capacity on. And also, we also see that from the consumption side, rooftop solar has really become a commercially viable solution, and it's also scaling up quickly. So we think for this sector, it could be very important, taking into consideration all this massive matrix happening, all the digital and AI solutions could really make the whole system more efficient and workable, in the sense that they can help to forecast a better production level. They can help into dispatching and integrating more efficiently at a grid level. They can also help have a better forecast at a consumption level. So I see India is really well equipped for providing solution on this sector. And the second one, moving to the mobility as well, we see that Indian government is having all the very admirable fame to all these schemes to supporting both from the electric mobility charging solutions and also on the vehicles side. So we also see very interesting opportunities. One subsector is new mobility solutions, like what Aravind has mentioned earlier on. Players like yourself and also like Wouw with bike sharing. All these are certainly very important to addressing the mobility and to give access to lower cost mobility to millions and billions of people. And the second one, with the faster growth of those mobility services, we need a proper energy solution that is affordable and it's suitable for the Indian local ecosystem. So that's where we really see China is slightly ahead on this, because the four-wheeler is already very much put into place. What we can see is similar to Indian government, Chinese government was very determined in the beginning, but to some extent in the beginning, we have learned that simple government determination won't just crack the problem. We have to have the good policy, because what happened in China is government was subsidizing the construction of charging piles, while thousands and hundreds of thousands piles being constructed, but not in the right location. It's not very well used. So that's probably somewhere I'm sure Indian government is having all the information to have a right policy in place to supporting a startup in this area. And lastly, for sustainability, again, we see massive opportunity happening. For example, plastic is a big issue. And also in India, it has its own local challenge. Plastic consumption is growing strongly, while the collection and recycling system is limited. So that's where we also see large opportunity for very innovative entrepreneurs to addressing the problem. So to hiding all that, I think for our sector, opportunity is massive and it's happening. We have so much resources going on now, people realizing it, but the challenge is massive as well, simply because the massive capex we are needing, all this infrastructure, those assets, and also the time needed for them to be put into place, to construction all these clean power plants and to build all these charging piles and to build all these vehicles. So we think there is definitely a challenge, and the government need to have a right policy, as we discussed early on, and also same time need to address the really the financing gap, meaning that there's a lot of money for the little ticket investment, lots of money, huge ticket investment for later stage. There's not a lot in the middle. So colleagues like Shyam, which I know very well, so they are really working hard on that. And companies like ours were also playing in the middle, hopefully with the support from the corporates, support from financial investors, and government support. Startup can really jump in from the early stage to the later stage, addressing this really, really important issue.
And so over to you then, Lathika. My question to you is a little more from a corporate investment point of view. And when it comes from in India, where very few big companies have actually incubated and spawned successful startups. So what actually vis-a-vis private equity funds and funds that are not part of the corporate investment, who are not corporate investors or running corporate ventures. What, in your opinion, is perhaps holding them back, and why do we see fewer probable successful ideas or scale-ups or lesser players vis-a-vis private investors?
So first and foremost, Pratibha, and thank you for having me here on the panel. I think the reality is that entrepreneurs are a very different breed, right? Being one myself. So expecting to thrive in a corporate environment, you can't basically tell an entrepreneur, go build, do whatever you need to do. But at the same time, you have all these compliances that you have to worry about. You have all these processes you need to worry about. It doesn't happen. Right. So the reality is that entrepreneurs need to be allowed to do what they do best, which is to ideate, innovate, build, thrive in chaos, and create their dream, their vision. Where corporates need to come into play is really to support entrepreneurs. The biggest challenge we have in India is the adoption of large corporates, the India Inc. as what I'd like to call, in terms of adopting technology and supporting these startups. Many of our startups leave the country and head across to the US or to Western shores so that they can be adopted. So the same startup that would rather move to the US and set up shop there, because you have American companies who are willing to give our startups a chance, and then they come back once they become famous, right? So the first and most important factor is not really worrying about corporates creating, ideating, innovating, etc. And then it's really about supporting startups, adopting their technologies, not asking for free POCs. That's my favorite mantra, which is #NoFreePOC. I've actually had heated debates with CXOs saying, oh, but we've given them a chance to come in and work for us. I said, that's not the right way to look at it. You need to look at the fact that for a startup whose bandwidth is limited, resources are limited, what they're bringing is value to you, and with value, it means there is dollars. So there needs to be a mindset shift in terms of adopting technology, in terms of supporting technology and investing in these startups. So I don't believe we need to worry about the large companies not having enough startups, inside of them and spinning them off. I truly believe it is the adoption of startup technology that's important. I work closely with clean tech startups, health tech, ed tech, and the biggest challenge they have is that they're building for India Inc., but India Inc. is not willing to adopt them, right? And bring them into the fold and give them a chance. So to me, that is really the most important part for us, to have India Inc. Really support startups.
And I want to comment on what Lathika said, because I have to agree with her. When you have these corporate incubators and so forth, it seems like most of the point of that is for the corporations to get a window on what's going on in new technology. And that's great, that's fine. But for the corporates then to try to also assimilate that technology into their own business, that's a whole different ball of wax, as they say in the United States. And that's where many of them fail. There's a very nice book written by John Chambers, the former CEO of Cisco System, which is supposedly one of the best companies in the world, or was one of the best companies in the world to do this. It's called Connecting the Dots. I urge anyone that's in a corporation to take a look at this book and look at what they actually think about at Cisco when it comes to what are the key arguments for buying a startup and incorporating into the company, and they perfected that, I think. So it's a good tool. They have some algorithms in the book for how to make these decisions. A really nice book.
Anyway, I just have one additional point to what Shyam has mentioned about cracking tier 2, tier 3, because 50% of our business come from non-metropolitan cities. And one of the things that I would definitely resonate is whatever you see in tier 1 city, you'll see a different form of solution in tier 2, tier 3 city. For example, people have seen a cab ride sharing in tier 1 possible, but you can't even imagine that going into a tier 2, tier 3 city, people ordering a cab for 2-3 kilometers to go, because the city itself is very small, or you can call it as a village, right? So, but that's where maybe a two-wheeler ride sharing has been a bit more prominent there. So right now in tier 2, tier 3, a two-wheeler ride sharing is bigger than a four-wheeler ride sharing, even though it's just near old. So, and one thing that we also observed in smaller cities is you don't generally have a competition in smaller cities because one, you have like hundreds and thousands of cities. So when you have hundreds and thousands of cities, you can just do in some other city where there is no competition much better than somewhere else fighting with the competition. And the unit economics are also actually better in smaller cities because we think smaller cities can't pay, but what we observed is they were also looking for convenience. So when they are looking for convenience, they can also pay a bit more premium. Yeah, I think still early days. Maybe we have gone to 30 to 40 million tier 2, tier 3 users, and still you have to go to even 100, 200 million users there also. But the early signs say that maybe the growth rate is a bit different to look from a tier 1, because here in one city you have a 10 million population, but in smaller cities you have to go to 30 to 40 different cities to go to the same 10 million population from an adoption point of view. So the growth rate might be a bit different, but definitely it's a huge opportunity, and definitely it's not a winner take all also in that way. So yeah, I think these are a few things that we observed during the last 2 years by focusing more on tier 2, tier 3 cities for the value proposition that we have.
Yeah, maybe just quickly and following on the very insightful thoughts from Lathika and Thomas. So on the corporate, large corporate and startup, I think that's a really, really very classic issue, because the large corporate realize, we cannot do without open system. We cannot just function like before. It's like closed society, have everything in-house. But at the same time, they are trying so many different ways, M&A, booster, incubator, accelerator, or venture. So I think corporates are like us. We can add in lots of value, but we're totally aware that startup, they are so agile, they're innovative, they're a different animal than the corporates with those activities and with large platform and procedures. So just to share that within us, we are very conscious of that, and we think we really need the system to work. And to make the system work, we need startup, we need financial investors, and we need corporates with industrial background and knowledge. So with all that adding up together, what we really, I think corporate venture can play an important role, being in the system with small tickets, with agile investment, with a decision process much more flexible, and then bring and understand the startup up from inside, closely getting to know them. So I'm sure that going forward, all parties can work out well, and we really need all parties to work out well.
Totally good segue. Shyam, you had something just before we close.
What I was just saying, we're thinking of was climate tech in India, Pratibha, is still underserved. Anything on the climate tech side. I mean, consumer tech, enterprise, B2B, SaaS, all of this it has enough and more capital and enough and more entrepreneurs. On climate tech, anything carbon mitigation related, we are still really underserved, especially on the early stages. I mean, there is barely even a single vehicle today that does a Series A or a Series B investment in climate tech, even barely one vehicle in the country. I mean, that's quite sad. I mean, considering the potential for so many companies that are trying to develop new products and solutions in Industry 4.0, e-mobility, and all of them, they struggle for that first 5 million, first to 5 to 10 million. That's a pretty big gap still in the market. But the amount of later stage investors have increased, so which is positive. So you've got a lot more growth equity, private equity investors in the market, which is great to see. But we still need to do a lot more to support early stage entrepreneurs on the carbon mitigation related space. Yeah, that is still pretty underserved in the Indian ecosystem in terms of financing, equity financing. Because I mean, I see the struggles of these startups. We ran a early stage climate tech fund in the past, and it was a real struggle to get them anything into any kind of Series A, Series B investment from the Indian VC ecosystem. None of them were active in that space. So hopefully that will change now, slowly, now that climate change is back again as a big topic of discussion. Hopefully it will make the financing ecosystem better going forward. Hopefully more players.
Way for you to sort of almost circulate it back towards where we are today, right? So E4, the Energy Entrepreneurship event, and places like Shell and funds like Shell Ventures and E4 that can actually start to be filling that gap of climate tech funding.
We need multiple players.
Yes.
We need multiple players. We need the corporates. We need regular VCs. We need even government support. I mean, because these are spaces that need a lot more effort before these companies can really start scaling up in a big way, unlike pure software companies, because there tends to be a hardware element in many climate tech companies. So wherever that element of hardware also comes in, it's a longer journey and it's a little bit more capex intensive. And those kind of companies have a really hard time raising capital in India today. If it's a pure software play, they will definitely have relatively an easier ride compared to anything with a component of hardware in it. And that unfortunately is the case for many climate tech companies. There is a hardware element for many of them.
Yes.
And hence their funding ecosystem is still a little weak in the country.
Lots of hope and energy on the conversation with regards to breaking into tier 2, 3, 4 cities, and how positive Aravind sounds on some of the massive funding they got anyway, and then just continue to sort of keep at it. We didn't talk about the gender part of Sonder Connect, which Lathika runs and then has seeded some very successful women entrepreneurs, but a beautiful diversity angle as well that sort of would have come in through that had we had a little more time and space to explore that. But the whole point about technology adoption and India Inc., so powerful on how bigger and better players can actually start to do this if only technology adoption obstacles and challenges could be overcome. And the story of how policy, regulation, and multiple stakeholders that would actually need to come together in the way you beautifully articulated, Xin, in sort of tackling this. And topping it all off like cherry on the pudding was, of course, the opportunity that still remains on climate tech and what massive changes we can do there, because that's immediately home to Shell E4 and some of the things that we're trying to do and seeing in reality. So thank you very much for your time. It was a wonderful but short conversation. We hope to do this over a longer space and continue these dialogues. I will definitely be in touch for several other aspects of trying to get your own learnings and experiences into our leadership journey and into what Shell can actually learn as well as from you as individuals. But for now, I'll thank you for your time.
Hello, everyone. I'm Aprajita Sen, VP for Shell Business Operations and IT Hub Bangalore. What an amazing and stimulating day this was, with so many fresh ideas, thoughts, and strategies put forward by the brilliant leaders and entrepreneurs towards a net zero carbon energy future. I, for one, remain very optimistic that we are firmly on the way to a future without carbon emissions. It was enlightening to hear from the thought leaders, investors, and the energy sector's maestros on the future of energy and the canvas of opportunities the space of energy entrepreneurship provides. In these last 2 days, we had a chance to learn about ideas transforming the energy space, impacting the lives of millions, and taking us closer to our goal of net zero emissions. These sessions and interactions with different stakeholders, budding entrepreneurs, and stalwarts of the sector provided us with a good understanding of the energy transition, as well as the challenges and constraints that come with it. At the same time, I hope these would have inspired you to pursue your own ideas and see them through to the light of the day. We have pledged our support towards energy transition by furthering innovation and entrepreneurship and solicit your support as well. We look forward to many more ideas, thoughts, and pathways inspiring us to move towards a better world that we will be proud to leave behind for the generations to come. With this, I would like to close the session. Thank you, speakers, partners, and mentors, and everybody who joined us today. Thank you all for joining us and making our E4 Demo Day a success. Thank you.